From thetraderguide.com, this is Chris, and I'm taking a look at the dollar CAD, and you can see that we are pulling back a little bit here in favor of the Canadian dollar on Thursday. But when I zoom out on the daily chart, you can see I have two lines. I have 130 and 131, and I think that this is basically a zone where price will flip, where I think that we should see a bit of support now down to about 130. So I anticipate that we should get some type of buying opportunity given enough time. Beyond that, you could, somewhat make an argument for, and this, might take a little bit of artistic license, but you could make an argument for a bit of an ascending triangle that broke above 131, started down at, say, 121, so that's 1,000 pips. Where does that get us? That gets us to 141. Well, what does 141 look like? Right about there in that mess. So that's doable as well. And with that in mind, I think that we may continue to see a bit of bullish pressure. I would anticipate a bit of trouble here at about 140 or 134, I should say. So I think it is going to be choppy. I don't think it's going to be easy, but I think we are starting to make the run higher. Pay attention to crude oil markets. They will obviously lead the way, but they got absolutely shellacked on Wednesday as Libyan ports opened up. There are hints that perhaps the BOC may have to raise rates. They're still behind the Fed, though, and that was announced during this session, which worked drastically in the favor of the U.S. dollar. So I don't think traders are too overly concerned about that. We're in a nice uptrend. I like buying pullbacks. I think if we break down below 130, then you have to question everything as far as this analysis is concerned. But it certainly looks as if there is a lot of demand down here for the dollar. So I think a little bit of a pullback offers value. The other route to take is maybe jump in and then add slowly on the way down, adding to a whole position, not anything more than your usual position size. I'm not advocating buying on the way down and trying to dollar cost average with a full position and then adding more and more and more. What I'm saying is if you normally play $100 risk, then maybe each one of these positions should be $20 on the way down as far as your position size and your risk parameters. I do think that eventually we will turn things around. I believe that this potential strengthening of tariffs and the trade war between the United States and Canada will most certainly favor the United States. The Canadian economy is dwarfed by the U.S. They're not even in the same neighborhood. So with that in mind, I do think that we eventually go higher. I think that just as an anecdotal story, I was in Toronto over the weekend, saw much less construction, much more in the way of trouble with the housing markets, and sadly more homeless people than I did just last year and last summer. So I'll be up there again in a couple months, but I have some concerns about the Canadian economy. Even though they're raising interest rates, I don't think they're going to do much of it, and I wouldn't be surprised if they have to turn it back around because they do have a nasty housing bubble, especially in the Greater Toronto area. So at this point, I think that there is plenty of demand underneath. I think 130 is a bit of a line in the sand, but somewhere between there and 131, we have a lot of orders waiting to be picked up.